What is up, everybody? Welcome to Why Invest Wednesday. We are bringing this back, and today we're just going to kind of get caught up, right? The Denver real estate market is not crashing, but it is negotiating. So it's been a little bit. So thanks for popping on here, and I'm super excited to get going with this. But let's roll. So, what's up, everybody? I am bringing back Why Invest Wednesday. And I'm also bringing back Mile High Market Mastery Live over on YouTube because this market finally deserves a real conversation. Denver real estate is not crashing. It's not booming. It's definitely not negotiating, or it is definitely negotiating. And that is a very different market than the one we've been living in the past few years. Buyers finally have more leverage and sellers can still win. And investors need to pay attention because opportunity usually shows up before everyone feels confident. And you may be a little crazy or think I'm a little crazy to say that sellers still have a little bit of power, but they do. But before you move in or out around the Denver metro or northern Colorado area, please call or text me. This is not a market where you want to guess because I've seen a lot of people make mistakes and they're painful mistakes. So we are going to fully dive in here. Let's cut through the noise. The Denver metro is no longer a frenzy market, but it is also not in a collapse. It feels like a collapse. I totally get it because of what we've seen throughout time and what we're used to. But the honest truth is that, in DMAR, the April 26th report showed 3,926 closed sales, 11,539 active listings. That's a huge number from when we were doing these on a regular basis over the last 4 years. 6,642 new listings, and the median close price was 605,000. Now that we're in June, the May stats are out, and they're very much around this. I've seen numbers between 615 and 599 for the median close price. The median time in MLS is 14 days. I'm sorry, that's not true. The average close price is $724,057. So the median and close price is a little bit different. Average close price, 14-day median time in MLS, 99.4% with that close to list price. So we are seeing a little bit of movement there. So that combination tells us it's a balance, not panic. There are materially more options for buyers, but well-priced homes are still moving and sellers are still closing very close to list price. This may mean that sellers, that are actually selling are closing at near list price because I know that there's a lot of strategies going out there. I've talked to a lot of agents and it almost feels like, pricing at 5% or 2 or 3% below market for a home that's move-in ready to go turnkey. Those are the ones that are really having success. And the bottom line is if you price it like it's 2021, the market will humble you. And frankly, some sellers need a little humbling. The Zillow fantasy pricing had a good run, but it's clearly not where we're at today. So the biggest change in this market is really supply, right? Active listings were at 11,539 at the end of April, and it's up a little bit from that now that we're here into June. So we have to understand that buyers have been waiting for exactly this, right? The sellers are starting to figure out, the buyers are out there. If you want to go get a great deal, now is the time as a buyer. I'm not going to sit here and say it's the best time to buy. It's a great time to buy because you still have to do buy smart because we are in a little bit of a changing market, a little bit unsure with the international stuff that's going on. And so the last thing we want you to do is buy at the beginning of, a little bit of a slide because 1, 2, 5% decrease there is certainly going to, have an effect on you as a first-time home buyer with a low, debt, low down payment and those kind of things. So we want to make sure that we're doing this smart, but now is the time maybe to get that discount ahead of it going down and just kind of know that that's what's going on. I'm not here saying it's crashing, but when we're talking about low down payments at 3 or 5%, a slightest shift in a hyper local market can certainly be in that range depending on what's going on. So now is definitely not the time to get into bidding wars, at least in the Denver metro area or northern Colorado. So I'd be very careful. I understand that some of those houses that are priced a little bit below and get bid up are the perfect home, but as the bidding war gets bid up and maybe it goes a little bit over kind of what the market value is, those people are the people that I'm having conversations with now that got into those homes, and the home didn't work out for whatever reason, or they had a lifestyle change. So we want to make sure that we're buying smart. Now is not a terrible time to buy, but it's also a time where we need to be planful. We need to maybe, plan for not the skyrocket appreciation that we've seen. So that's absolutely a huge piece of this. And I want you guys all to make sure that whoever you're talking to, whoever you're working with is absolutely helping you with those things. So, I'll say it like this. This is what the buyers have been waiting for. Not necessarily a crash, but choice. Choice means leverage. Choice means inspection conversations. It means concessions. It means you don't have to write an offer like you're trying to win a hostage negotiation. And that's huge, right? More inventory does not automatically mean homes are cheap. It means buyers have more room to be strategic, and maybe getting into that perfect home with that perfect bidding war is a little bit of, a heads up, right? Let's talk about this. There are more options. There are other homes out there that maybe are a little bit overpriced, but are the perfect home. And we can talk about those negotiations as well. So more inventory means sellers cannot be lazy with pricing. This is 100% the case. You need to be pricing aggressively, but I always tell my sellers, do not price the home, at a price that you would not accept. Because as an agent, if we get a full price offer, let's be ready to move on that, because there's no guarantee, right? Could be a nice sunny weekend in Colorado, and as you know, if you watch this channel, the campers are out and they're doing their thing. So we definitely don't want to be lazy with pricing. We want to prep. We want to make sure the presentation is as good as it possibly can be. And we have to be prepared for negotiations based on, things that may be fixed down the road. Selling as is code word for selling $30,000, less than you go under contract for, because people are going to ask for those big time appliances, the big time, price costs as far as roof, foundation, plumbing, electrical, HVAC, those kind of things, radon. They're going to ask for those things pretty much 100% of the time. So I would definitely build that into your negotiations or at least your thought process. So the price story is boring in the best possible way because it's mostly flat, right? We had a $605,000 median close price. Like I said, it's about $724,000 average close price. Year to date, the median close price is down 1.17%, and year to date average is down only 0.26%. So median and average are a little bit different. Take you back to those statistics classes back in middle school and high school. Now my elementary school kids are doing it. So shout out to those guys crushing it. Year to date sales volume 8.88 billion is down 3.95%. So even as we kind of see this, we're down 3.95% about, at the halfway point of the year, 1 month short. So if you were waiting for Denver prices to fall off a cliff, that cliff has apparently been under construction for 3 years. We're just kind of slowly getting there. Prices are not exploding higher. They're also not collapsing. That matters because if you're a buyer, the opportunity may not be massive price drops. The opportunity is in the negotiation, the seller concessions, maybe the rate buy downs, and less competition. That's where the real opportunity lies. And we want to have somebody that's, kind of up to date on the market, so that we can plan accordingly, right? For instance, when we were talking about appraisal gaps back in the day, and, there was calculators out there that we had that said, hey, if you go $50,000 over, it's going to, take you about, 28 months to have that appreciation, catch up, and then you'll be at even. Right. And sometimes that got a little convoluted, and I know it got a little bit crazy, but the truth is that was if the market just kept going, and honestly, it did not keep going, as we all know. So rates, they're painful, right? Sometimes they're better, sometimes they're worse. They're really about the same. And the truth is that no one's throwing a parade over the rates right now, right? We've heard, we've been waiting, and it doesn't seem like interest rates are ever, not ever, but they're not, on the path of trajectory to say, hey, it's coming down. You can get in at this interest rate and refi in a couple months. That's just not the case. So we need to be very careful with that as we kind of go. We don't need to get into rates and talk of that, because the honest truth is they don't really matter, right? Because rates, especially with the concessions and in this market, can really help you, buy down those rates and get more affordable and get better, leverage and have more opportunity. So buyers do have more leverage, but the payment is still a problem, right? Rates are not cheap. And the truth is they're still kind of in the middle. They're not at their absolute worst they've ever been, but they're certainly not the better. So the market isn't struggling because people do not want homes. It's struggling because monthly payments are forcing people to be more disciplined. As you know, we had a pretty big savings after COVID, and that's kind of disappeared. And now we're, in the biggest credit card debt. So, before you decide if a house is affordable because on the internet you saw, a cool monthly calculator, call or text me. Those calculators are like, fortune cookies, really, with a mortgage logo on it. Like, let's get you with a real professional. Let's have you have a conversation so we really know what we're looking at. Because as I've said from day one, the mortgage rate is the most important piece, or the mortgage, not the mortgage rate, but the mortgage total each month, the monthly payment is the biggest piece for you. Because the last thing I want you to do is call me and say, Jeremy, I can't afford this house in 6 months. Because at that point, we have no ability with the fees and with all of that to, throw it back on the market and get you out of there unscathed, because it's just not how it used to be. So this is not a buyer's market for everyone. So this is a prepared buyer's market. So if you're prepared, you have the right payment strategy, seller concessions, rate buy downs or options, you understand those. You have the inspection leverage, you have days on market, you have price reductions, property type differences, and long-term ownership plan. Like, this is who the prepared buyer is, that understands all of those things. So DMAR's month of inventory was calculated around 2.94 months of inventory with an absorption rate of about 34% based on DMAR's active listings and closed sales count. So this is to, compare to below a month. We were at weeks of inventory at one point. So that's something that we have to really pay attention to. 3 months of inventory is certainly not a fire sale, but is a very different market than buyers having to waive inspections, name their first child after the seller, and offer $80,000 over asking. So just understand that in order to be considered, those things aren't really happening with that 3 months of inventory. So if you're buying in Metro, Northern Colorado, reach out. Let's have a conversation before you start touring. Let's get you to be a prepared buyer so you can take full advantage of this market and honestly, this opportunity. We need to know, before we start looking at houses, before we write the offers, because otherwise we're going to fall in love with that kitchen and we're not going to be able to ever cook in it, right? So the seller is where we need to be honest. This market is not bad, but its sloppy pricing is getting punished. Homes were still closing at 99.4% close to list price ratio in April. Now, this is the list price when they go under contract. So, I think what's happening is buyers are waiting for the properties to come down instead of looking just a little bit over your max price point. If you do that, you have to be careful. But if you're looking at homes that have been on the market more than 10 days or, whatever, but the median time in the MLS was only 14 days, right? That means properly priced homes are still moving and they're pulling down, some of the stuff that's sitting. So that's definitely something to be aware of. If your home is priced right, presented well, and positioned correctly, this market still can perform. But if you're testing the market may test you right back. And so I want you guys all to be prepared as sellers. I'm having real conversations talking about, quick turnarounds of people that bought over the last 3 years, and they're just not in a position where it makes sense unless they're willing to lose some of the, down payment or whatever and go from there, right? Because the further you get out, the closer we get to, the quote unquote selling for what you bought it for. But then there are still fees, there is still stuff that goes, or maybe even a little bit over, but then the fees kind of consume that. So we just need to be very careful. I always say pricing correctly from day one is huge. Watching competing inventory, and know what builders are offering nearby. If you live in an area on the outskirts of the metro area and there's a lot of building going on, we need to take that into consideration and understand that, buyers are walking in there and getting 3-4% interest rates. And so we can't necessarily price in line with some of those new homes, even if we're fully updated, if we want the best results. So use those concessions strategically, and don't chase the market with tiny price cuts. Make price cuts that are going to matter. We're talking 3, 4, 5% or higher. And so we really need to make sure of that. Watch those bridge prices, right? People look at the 25 increments usually. So they set those. So we don't want to price it, 330 instead of 325 if you can at all afford it. So if you think about selling, this is a major time to be strategic, and let's hang out. Let's talk. Let's see what it is. I promise you, I've walked into more houses lately and said, it's probably not the best time if you can, stick it out in this home, continue to do what you're doing, maybe make these improvements, and maybe we see what's going on in the spring. Or maybe if you have to move, is it an opportunity to rent it out, right? I believe in that because that's how I roll. But this is why I'm bringing back Why Invest Wednesday, because of conversations like this, so that we can, fully understand what it is, and understand that you as a homeowner are in a prime position to not sell a home in a tough market and hold on to it, maybe move out, maybe use some of your savings to get into a new home and a down payment if you're busting at the seams or whatever. But the honest truth is, like, I tried to sell my rental when I graduated college, and we would have broke even. We didn't sell it, and today that rental's turned into 6 different doors for me that are cash flowing, famously because I took advantage of the low interest rates when they were there. So let's talk about that. Let's make sure we understand that, but also the new construction stuff. Keep an eye on that, right? New construction roughly, accounted for 12.6% of the March 2026 home sales based on Zillow. That means roughly 87.4% of the deals were still resale. So new construction matters, but resale still dominates, especially in our market. Builders are absolutely part of the story with incentives and rate buy downs. So we need to be careful, but resale is still the bulk of the market. That's where smart buyers and investors need to understand the motivations. So different investor angles: house hacking, buying a house and living in it, fixing it up, and then renting it out or renting rooms out while you do that. Absolutely amazing strategy. Buying with seller concessions, turning current home into a rental, like I said, attached product opportunities such as ADUs and so on, multi-generational living. Got one of those down in Castle Rock if anyone's looking. Long-term hold strategies, just, really have a plan, because honestly, if we can hold on to it right now through this little dip, and then we get back to more of the average appreciation over the last 60 years, you're going to be sitting pretty in 10 years versus, somebody who gave away that house, for a little bit lower price. So I'm not here to tell you not to sell, but move up buyers keeping the old home is certainly a way that I've succeeded, even though I did sell one of my houses to move into this one that I'm sitting in right now. And buying when competition is lower, and that's right now. Investors don't need a crash. They need motivation, negotiation, and a plan. So if you're looking at getting an investment, that's my whole goal, is to help you build wealth through real estate. And the easiest way to do that is turn the home you live in into an investment, and then strategically move forward. And we can talk about that. There's lots of options. I have some people that are trying to do that right now. We're testing the market. We'll see where we go. So yeah, not every part of this market is behaving the same. So understand that, detached 500K to 749, 2.12 months of inventory; detached 750 to 999, 2.34; attached 750 to 999,000, 5.72 months; attached 1 million to 1.5, 6.57 months; and detached 2 million to 5.4, 2 million plus was 5.44 months. So this is where the headline market gets people in trouble. Detached homes is in the core price bands are still relatively tight. Attached homes in the upper middle ranges have way more leverage. Luxury detached has slowed a ton. So we need to understand that, and understand the detached middle market homes still have demand. Okay, this is where it's at. Attached homes may offer more buyer leverage. Luxury buyers may have more negotiating room, and sellers in softer segments need to be aggressive and realistic. So before you assume the Denver market is good or bad, call me. We need to look at your actual segment, what's going on. And it's also hyper local, right? I'm giving you a 12 county assessment of what's going on. So as we go, that's huge. So what's all this mean for homeowners? The market is creating a decision point for homeowners. And the truth is, a lot of homeowners are holding on to low interest rates like it's their high school jersey, nostalgic, understandable, but not always practical. So questions homeowners need to ask: does this home still fit my life? What is my equity position? Could this home become a rental? What would it look like? What would the next payment actually look like? Can seller concessions offset part of the payment shock? That's absolutely a possibility. And what is the cost of doing nothing? Because that's the truth, is we only get one life, right? And so your lifestyle definitely matters. So if you're sitting on equity but feel stuck, let's reach out. Let's talk about this, because I hear this often, like, I could never sell. And the truth is, you could probably leverage some of that equity through a HELOC or something else. And maybe it is possible to get there without refinancing that amazing interest rate that you're holding on to. So what's holding you back right now? Rates, payment, inventory, uncertainty, or current low mortgage? Definitely put that in the comments. I would love to hear from you, and then we can talk about, would the seller concessions change the math? What would change the math? Because ultimately, I want you to be in the home that you want to be in, and if we can make it work with intelligence, I'm gonna be, the person to have those conversations, and I promise you, I will never tell you to do something that I don't think is a good idea. So I'm not always right, but usually I'm pretty close. So you're more interested in buying your next home or turning your current home into a rental? Do you think Denver is headed towards a crash or just a normal market? The truth is, I don't think we're headed towards a crash, but I don't think we're headed towards an immediate uptick where everything's, sunshine and rainbows. So certainly reach out and comment below. I'm so excited to be doing this, and I will be back next Wednesday. So the bottom line after all of that, it's not, the Denver market's not crashing, it's not booming, it's definitely negotiating. Buyers have more leverage, but the payment still matters. Sellers can still win, right? And some sellers are just being those people, and they're being tight. And sometimes it comes around, and a lot of times it leads to expired listings and headaches and a lot of conversations that I've also been having. So, but they have to price and position it correctly, right? Investors should be watching this market, because opportunity usually shows up before confidence does. So if you're thinking about buying, selling, investing, downsizing, moving, or figuring out what to do in your current home, reach out with any questions. Guys, I'm so excited to be back. Before moving in or out of or around Denver metro area, Northern Colorado, call and text me. 303-543-1453 is the new business line. I've also started a new YouTube channel for homeowners here in Denver. If you're a homeowner in Denver metro, Northern Colorado, head over to the new channel, show me some love over there on what's happening in Denver. We're talking all about all the developments and what's going on and how it affects you, your lifestyle, and most importantly, your wealth. So we'll talk to you guys soon. Thanks so much, and we'll catch you next time.